Welcome to the Global Pulse, a short video series where our experts break down a trending topic in international business and why it matters to you.
In early November, a controversial speech delivered by Jack Ma, the co-founder of Alibaba and Ant Group, triggered a sequence of regulatory actions by Chinese regulators. The highly anticipated IPO of Ant Group was halted. Several Chinese regulators published new restrictive antitrust rules on online businesses, which will affect almost all leading Chinese internet companies, including Alibaba, Tencent, and JD.com. Since then, those companies have lost almost $300 billion of market value globally. Many of those companies are listed in Hong Kong and in the US. Our retirement accounts probably are investing directly or indirectly in those companies. It would be helpful to understand the background and the potential impact of those regulatory actions happened in recent. First, those actions happened in less than 1 month after the US House Judiciary Committee published a 400-page antitrust report on the 4 largest technology companies in the US: Amazon, Google, Facebook, and Apple. This may indicate there are common concerns on the growing power of those leading technology companies in major economies in the world. In China's case, those leading internet companies have grown exponentially in the past decade or so. Part of their successes was due to extremely accommodating regulatory environment. After they grow to their sizes today, there is naturally a need to re-examine the regulations, especially the antitrust regulations on those companies. So I believe the goal of the recent moves by Chinese regulators is not to stop the growth of those companies, but to make sure the future growth of those companies will be within clearly established boundaries. So in that sense, I think those actions actually will benefit those companies and the markets overall in the long term. Second, as the influence of those leading internet companies grows in China, so is the influence of their high-profile co-founders, such as Jack Ma. He basically criticized the Chinese financial regulators in his speech that they focused too much on risk control instead of development. This definitely irritated the Chinese regulators. They want to send out a clear and loud message who is really in control. I think they successfully achieved that goal. However, it is unclear how this action will impact entrepreneurship activities and potential IPOs in Chinese markets in the future. Third, a couple months ago, President Trump signed executive orders to ban WeChat and TikTok in the US. WeChat and TikTok are 2 apps produced by Chinese internet companies. So it is interesting to watch how the recent regulatory actions will impact the growth of those leading Chinese internet companies into international markets. But the bottom line is, the actions taken by Chinese regulators will not stop here, probably. I believe new regulations are coming. Therefore, investors need to be aware of this significant regulatory risk associated with Chinese internet companies. When they make their investing decisions, they need to watch this risk very closely and the potential follow-up developments as well.